Welcome back. I'm Brandon, the HBAR Bull, and I do some contract work for the HBAR Foundation. That said, I'm not doing this interview in any official capacity, and the opinions expressed are just those of my guest and I, not the foundation. With the very public blowup of FTX, many blame it on crypto itself. But that's like blaming the Enron scandal on electricity, WorldCom on telephones, or Bernie Madoff's Ponzi scheme on investing. In truth, using crypto and DLT could actually prevent those scams. Decentralized finance, or DeFi, carries its own risks, but wouldn't allow for the blowups like we saw with FTX. Today, we welcome back David from the Pary Fund, Gadam from Stader, and a new guest, True Voodoo, the co-lead of Potluck Protocol, who has experience in Hedera NFTs, DeFi, and traditional finance to compare and break down the pros and cons of centralized and decentralized finance. Welcome, guys.
Hi.
Welcome, Brandon.
Glad to be here.
Thank you. Thanks for having us.
All right, it's my pleasure, and we'll kick it right off. We've already gone over some of this with David last week, but Gadam, can I get your take on what happened with FTX?
Yeah, sure. Before I get into it, just a couple of disclaimers from my end. Of course, the opinions I express here are my own, not an official stance from Stader. Second, what I'm about to tell you is obviously a gross oversimplification of how things have actually gone on, and there are a lot more intricacies which we probably won't get into. Right. So with that said, for the regular person out there, basically the story starts with two companies, one FTX, which is an exchange, and one Alameda Research, which is basically a proprietary hedge fund, being owned by the same person, but technically being separate entities. Now, what happened? Alameda had, a series of losses due to the sort of crypto winter, you can call it, or the Luna crash, whatever you want to say, during this year, which led to them having, a series of losses, and then leading to them borrowing funds from FTX with FTT token, which is the FTX's token, as collateral. And these funds were basically from users that had deposited their money in the exchange. Now, as a result, when this was disclosed in a leaked balance sheet of Alameda, one of the biggest holders of FTT at that time, which is Binance, saw this. They did probably their own research and very publicly sold the FTT token, which led to a downfall in the price of the FTT token, which basically meant that the collateral that the FTX exchange was holding was now no longer sufficient to cover the liabilities that they had to the users. That whole basically created a bank run on FTX, and then the sort of house of cards came crashing down. All right. So that's in a nutshell what happened. Of course, there we'll get into some of the structural issues of why this would have happened. But that's in a very, very concise way what my view is on what happened.
Thanks for the synopsis. True, what's your take on what happened? What were your takeaways?
So, I mean, that was an excellent explanation. And I watched David's clip from a few days ago talking about it. Man, I've been just hooked to listen to every Twitter space this whole weekend. We have family in town, and I had one headphone in it was just captivating. But I actually had learned my lesson with the Voyager saga. Had funds on there, had USDC on there, sitting, earning 8-9%. Thought I was as safe as could be. Very naive. Hey, a publicly traded company. Let me put my money there. It's way better than what we're earning at the bank. I'll earn more in 1 month than I would in 2 years in my bank account. And so that money's locked up. Who knows what's going to happen with their bankruptcy now. So I learned my lesson. And so thank goodness I didn't have any money sitting on FTX. But I know we're going to talk about regulation later, but I think obviously it's a huge black eye for the industry, but it's just, it comes down to greed. I loved in your opening, saying that obviously people want to blame crypto, but it comes down to greed. Mm-hmm. It comes down to greed from us as consumers wanting super high yields that we don't really ask questions on how they're being obtained. We don't do the due diligence, but also it came down to greed from a centralized exchange practicing essentially a Ponzi scheme, fractionalized banking, what happens in traditional finance because it's backed up by the US government. But then also, putting the back door in ahead of time. I mean, this was not just some mistake that happened. This seems to be pretty well thought out in how they were going to cover themselves. And so very unfortunate. But I do think, as we talk later about regulation, I think this will lead to regulation that's necessary to bring back institutional money into the space. And so hopefully it's a course correction that ends up being good for the industry. But right now, I think there's a lot of temporary pain still to come.
Yeah, you made some great points, but you're not alone losing some money in this space. I had some money on Celsius, so I lost some of that. Not devastating, but still enough to hurt. Okay, we'll go on to the next question. There seems to be, there are issues with DeFi, but it would seem that it would have some of the answers to prevent what occurred with FTX. How would you compare the risks associated with DeFi versus centralized finance? David, why don't we go to you on this one first?
Thanks, Brandon. Well, if you had talked to me last week, I would have told you that, CeFi is safer than DeFi. And I say that because, one, it's a user interface that attracts retail. To get the average retail person to come into DeFi, it's just not going to happen. Centralized exchanges historically offered a blanket of security, right? They offered a suite of offerings and a one-stop shop. Everyone was a lot of them used the term SAFU, S-A-F-U, as acts as an insurance fund.
Sure.
So, you felt safe, and they did a really good job of kind of hand-holding crypto retail into the crypto sector. The problem with centralized exchanges now is they're just not safe. You run the risk of what happened with FTX, and that, is commingling funds between an exchange and a prop shop, unethical, illegal across the board. So right now, what I would say the risks are both. With DeFi, the risk is there's no centralized touch point. You run the risk of getting rugged. You need to be much more cognizant of what you're doing, paying attention to contract addresses on decentralized exchanges. Centralized exchanges historically removed all that. They removed the risk. They offered a blanket of security for people to come in. That doesn't exist right now. And as such, whether there's risk, you can weigh the risks on both centralized or decentralized. I don't see retail coming in anytime soon, especially with this. Like Adam said, FTX was like a crypto darling, and True said it best too. I mean, this is a black eye across the board. You're going to have people scared to enter the sector, and especially with the U.S., with interest rates going up, the U.S. dollar is getting stronger. You're going to find retail looking for value elsewhere. I mean, this hurt on a variety of levels.
Sure. So, Gadam, what are your thoughts on the risk associated with DeFi versus centralized finance?
Yeah. So I just want to take a step back, right? So basically, in any financial system, and trust, I've kind of worked a little bit in TradFi as well. But the idea is, how do you establish trust in an institution for people to give their money to that institution? Now, in TradFi, how it's traditionally been done is that, okay, you have a bank that's being regulated by the government. And what you basically say is you outsource the establishing of trust to that government or that entity, be it the SEC or the Federal Reserve. They're going to monitor a set of parameters. They're going to do the policing on the banks. So you basically outsource the trust to the regulator in TradFi, and possibly now where we're moving into CeFi, right? In the DeFi, basic premise is to establish the trust. Instead of having that central entity which is monitoring, you put all the information on the blockchain, right? So it's there for everyone to sort of scrutinize and peruse and come to their own conclusions. Now, that has its own problems because that information is not in the best way, shape, or form for typical retail folks to kind of look at that, right? But if you look at it technically on how trust is being established, these are the two models that are being followed. Now, CeFi fell somewhere in the middle, where they did not have a regulator, but there were these entities that were saying, hey, trust us, we will self-regulate, essentially, right? So now, we've seen that really didn't work, right? Because like was mentioned, basically greed took over and they said, yeah, we'll do this and that. So obviously, I don't think that's a model that's going to survive, right? We are big believers in DeFi, so I won't want to color my opinion because I definitely feel that long-term, the way to do this is through DeFi, by having all the information on blockchains and then having services that produce that information and give good risk assessment independently to people who are looking to invest for a value, right? So it's basically what the Moody's and S&P of the world should have done, right? Take money from the people who are looking to invest and do an independent research, right? So that we feel that is the sort of end goal and the holy grail for DeFi. But obviously there are problems which are not, going to go away anytime soon, right? Which basically are, how do you establish a sort of bare minimum way in which information is processed and stored so that people can actually, accept it and, process it in the sense whether this is good or bad. Basically without having to spend 6 hours, how do you know that this protocol is good and is being verified and you can trust it with his money? So I think those steps we need to take. The other step that David touched upon is just the user friendliness, right? There's a huge difference between users' experience on CeFi, which is more like traditional Web2 platforms, versus the DeFi side of things, having to manage your own sort of addresses and private keys, etc. So those things are things for DeFi to solve. But if they do solve it, that's the one side of things that will kind of can be an end state. The other end state is that we sort of turn DeFi into what traditional finance is, where we have a regulator which is looking, which is basically outsourcing of trust to the regulator, right? So which is looking at all of these parameters for all these CeFi players and then saying, hey, I sort of stand behind these CeFi players, that these guys are following whatever protocols or limits that we have set, and hence you should trust them with their money, right? The risk in that is we sort of clench our fists too tightly and sort of stifle innovation. Maybe not. We'll probably do that and then sort of hopefully loosen it a bit as things go on. But yeah, I just wanted to take a step back and actually just sort of display those two sort of models of establishing trust that is basically at the heart of CeFi versus DeFi.
And I mean, we can do both, right? And that's pretty much the point you're getting to, is we can tokenize traditional finance assets and, use smart contracts to add a whole nother layer of trust in addition to the regulators. So great points all around. True, do you have any thoughts on the relative risks between CeFi and DeFi?
Yeah, man, I love, Gadam, what you said about outsourcing trust. I think that's a really cool way to put it. When I think about what a centralized exchange is for, it's for exchanging. Money should be put on there just to exchange. And then the ethos of crypto, then you put it on your wallet, whether it's cold storage or it's your wallet of choice, you should take it off. I think the risk comes really when you use protocols like Potluck, like Stader, where you have to rely on contracts to secure you. And I'll give you an example on Phantom, a network that I started in DeFi on. There was an auto compounder protocol that had been audited, but they had, after the audit, they had changed something. And nobody was really aware because, like was mentioned before, we don't know how to read contracts. The average consumer, they're not reading the contracts. So they're really getting into things just based on, is there a lot of money on this protocol? Okay, I can trust it. Mm-hmm. And so then you have contract risk, where it can be exploited. You see DEXs, you see compounders, you see bridges. I mean, all types of things have been exploited. And it seems like every time you think you can trust, a big protocol in DeFi, there's an exploit for hundreds of millions of dollars. And so I think that when it comes to just exchanging money, and I think DEXs are far superior because you don't have to rely on that centralized entity. But I think that it's where greed comes in. I think that everyone's always looking for a better return in crypto. They're looking to get rich faster. Mm-hmm. And so we take more risks. We leave our coins on platforms, and it is hard to know who to trust. And you can get audits, but how do you know if it's a good audit? I know early on for me, when I got into DeFi, I'd just look at their website, see if it was audited. Then later I find out that most of these audits just cost a couple $100 and they're, mm-hmm. They're really no use. And so then you have to learn on what's a tier 1 auditor, what's actually worth it. And so, yeah, I think that DeFi has a long way to go in the education process for consumers to where they can really feel comfortable. I remember talking to a neighbor. He's really interested in getting into crypto, but he said there's a level of ignorance that he's comfortable with investing. And he's like, I don't know if you could talk to me about crypto for a month and I would ever get to that level of ignorance where I'm actually comfortable putting in the money.
Yeah.
And I think that's the bridge we have to cross.
Yeah, it makes perfect sense. Gadam, Troop brought up a point about audits. You guys obviously audit your smart contracts. How do you vet the auditors to make sure, and the audits once they're done, to make sure that they're trustworthy?
Yeah, great point, right? So I think we, as a protocol, went through a bunch of auditors because we are multi-chain, we're present across exchange. So we've had like tens of audits done on our smart contracts, right? So we've kind of gone through that journey and, like Drew mentioned, sort of figured out for ourselves which one were sort of good auditors and good to work with and constructive, and which ones were just sort of trying to check the boxes and just get their fees and sort of get out of there, right? So it's been a learning process for us as well. I would say there's not really a science behind it, but if you can sort of look at the exploits that some of our auditors have brought forth, like Halburn and PeckShield, it's true that they are in the upper echelon of the sort of auditing firms. The other thing is to just do multiple audits. Like, so for V3 on Hedera this time, we have done 2 audits, Halburn and PeckShield both. Right. So just to make sure that, if there's a, 5% probability of one auditor getting it wrong, then it's basically, 5% into 5%, which is much lower, like 0.25% to her of getting both of them getting something wrong. Right. The other thing that we've done in some changes that have, bug bounties. Right. So that's constantly people are sort of looking at your smart contract and trying to do that. And two of our chains, we've got like $1 million each as a bug bounty for folks to kind of find out if we have sort of made mistakes. So like putting our money where our mouths are, basically. Like, so those are some of the things you can do. I think ultimately, like I was mentioning, I think there is a gap in DeFi for somebody to come in and say, this is the capital backing me. Let me audit these things, invest through me, let me take a portion of the proceeds. Right, but I sort of underwrite some of these protocols that I look at, some sort of a security plus insurance play, because all the information is out there. You just need to sort of make sure that you're monitoring it and going through it. And I think that will be a separate service in itself that people will develop, hopefully not too far into the future.
I got you. Now, I'm very interested in this because I use Stader smart contracts every day. You use heavyweight auditors like Halburn to audit them. Have these bug bounties ended up with any findings, anything serious in your experience?
Touch wood till now, no,
Okay.
for us, but for some of the others, they have, right? And I think that is where it is, right? So I think when we look at bug bounties, we look at these big figures because of the fact that we understand the loss in reputation for an exploit having been found is much more than $1 million for us, right?
Mm-hmm.
It's 20-30% of the company. If it's a small sort of bug, if it's a big sort of big issue, it could be the entire firm itself, right?
Sure.
So for us, it's like a small price to sort of put out there to make sure that the community is helping us, making ourselves more secure. Yeah.
Understood. All right, so I'm going to go to David on this next one. The fallout from the FTX mess is going to have positive and negative implications on DeFi. In your opinion, what are they, and how will they affect the DeFi space in the short and then the long term?
Well, I think with the loss of trust in centralized exchanges, it's going to push crypto native people more towards the open transparency that DeFi platforms, provide. However, short term, I mean, we lost users. The ecosystem took a hit. Money flowed out. I don't see it flowing in a meaningful manner anytime in the near term. But this gives us an opportunity as an ecosystem to take a step back and see. We had an event happen, and the question is, what do we do? Do we just rush to judgment and try to issue a whole bunch of regulations and pass a bunch of stuff and kind of make ourselves feel like we did something? Or do we as an ecosystem kind of take a step back and see how can we establish a set of best practices? I don't know if the DeFi Alliance within the Hadera ecosystem, Project Sentinel, Headstarter just released it, something like that. It's these little things that can help. But the problem is things were actually running fine. DeFi's been running fine. It ran fine through the 3 arrows liquidation, through Celsius. It's always been, anytime it's open and orderly liquidations. It's great. The only thing holding it back is how does it attract, retail. So with everything going on now, I think it's a good opportunity for the ecosystem to take a step back and to see, how can we best approach this? Because the crypto is not going anywhere. But it's a matter of, how do we move going forward?
Yeah, makes perfect sense. True. What do you think about the positive and negative implications for DeFi and the impacts it's going to have?
Yeah, so I think in the short term, you are seeing a lot of the DEXs, their coins kind of pumping or at least outperforming the rest of the market as people are betting on DEXs again. But like David said, I think that there is a lot of pain. There's a lot of people scared away for a while. But I think that the regulation that comes, whatever it is, will give clarity for institutional money. Where there's no regulation, the big money just can't come in.
Sure.
And so I think that hopefully the regulation is not a killer, and I don't think it will be. But I do think that when you look at DeFi, I think that protocols that are built around Ponzinomics, protocols that are built where there's no real use case, there's no real profit made besides the emission of their tokens, I think they're going to have a real problem once regulation gets here. And so, but I think that's healthy for the space. I don't think that people should just be coming into DeFi for massive yields that are unsustainable and are bound to crash on them. I think, in the end, I'm very hopeful for where we're headed, to have actual businesses that produce real profits, have real use cases, and kind of can shut up that narrative in the media that crypto has no use case. So,
yeah, we actually just put out a clip of Lehman talking about some of the positive attributes of Hedera, and we'll get into that in a little bit. But Gadam, what are your thoughts on the implications for your corner of the industry?
Yeah, no, so I think David and Drew said it correctly. Like, the timing is a little bit unfortunate because I think some of the institutions were starting to dip a little bit more than their toe into the ecosystem, and now they'll probably take a step back and go. And I think it's from us in kind of deep within the DeFi space. I think it's also a time for sort of introspection to kind of see that while the core tenets of DeFi have helped the DeFi sort of space, stand tall or at least stand up while these things have been going on. But there are, things that we can definitely improve on, right? I think the question of risk management is one that is not often asked by users, by protocols, by the ecosystem in general, right? So I think there's a lot more education that can be done at the user level on what are the risk management tools that are there that people follow. How the yields are generated, being super transparent and super easy to understand with those kind of things. And the one thing that I said, right, ultimately, how do we make the user experience so simple that people can sort of go through this like a Web2 application, but have the information and transparency that is the promise of DeFi and blockchain technology.
Well said. Now, we've gotten into this a little bit. Now we'll take it head on. The FTX scandal is going to have big ramifications for regulation. David, what would you like to see come out of the inevitable regulation and legislation? I'm sure there's going to be legislation around this as well. And what will result from all this?
So, interestingly enough, the issue with FTX isn't a regulatory issue; it's an issue of fraud. That's what kind of like kills me with all this. Is
sure.
It's a thief. Like we have laws against that. No, but yeah. So as the son of two lobbyists in DC, something is going to come of this. Just Washington's going to respond in some manner. I hate to use the term opportunity, but there is an opportunity. This is going to come to the forefront in Washington. It's going to be a concern. It's going to be able to get addressed. So this is kind of an opportunity for the industry as a whole to maybe get some clarity from the government that we've been longing for a while. Like, let's define what is a security, what is a commodity. Let's define how, what governing body should be, quote unquote, regulating the crypto sector. Can we put in checks and balances for US-based exchanges? FTX US, full disclosure, I was a customer of them. I was able to get my money off Tuesday morning. But, I thought uniquely that both FTX, US was supposed to be a separate entity. I almost thought our over-regulation kind of helped us in a way. But, something's going to come of this. There is going to be legislation passed. It's going to come to the forefront of concerns in Washington. So this is, for lack, I don't want to I hate using the word opportunity because a lot of people lost their jobs. A lot of people lost money. I'm incredibly cognizant of that. But maybe now is the time that we can get Washington to actually, pay attention to this and get some clarity to really help the industry move forward.
So I have another question. You talked about, what's a security, what's a commodity. Is that how we should frame it? Or should we be saying that crypto needs to be a new thing? We don't consider currencies a security or a commodity. Don't you think we should get legislation that is going to carve out something new for this new technology?
Yeah, I think we almost have to, or at least work together with the government to create some type of body that handles this directly. I mean, you can put it, there's a lot of sectors you could classify it under, but there needs to be some correlation between crypto and the government. They're not correlation. There needs to be some direct, there needs to be a conversation going so that we can pass, they can effectively regulate in a manner that doesn't hinder development of the sector. So, I mean, right now it's all, I'm kind of just grasping at straws. I mean, look at the Ripple case, like the SEC, like that thing's been going on for 5 years. We just don't know who to go to. And when we want clarity, we're not getting it. So now is the time for us to really kind of lobby Washington. Frankly, I saw FTX US open up an office in Washington. They had a guy from the ex-guy from the Treasury Department. You saw it with Sam Bankman-Fried lobbying for the DCCPA, which, was actually hindered DeFi a little bit. But we're going to need some type of there needs to be some type of conversation between the crypto sector and the government, and it needs to be done in a thoughtful and well thought out manner. And I think now is the time for people to take a step back and approach it in a streamlined process. But the question is, how do we get everyone together? We're speaking Hedera. We're just one of not a blockchain, but we're one of many ecosystems. What can we do to bring all the ecosystems together to kind of come as one voice to Washington? If you come in with 30 different small interests, it gets hard to get anything passed. But if you come in as one voice, and one strong voice, they tend to listen.
Yeah, great points. True, what are your thoughts? I know you've been chomping at the bit to talk about regulation. What do you have in this front?
Well, as the son of zero lobbyists, I feel like I'm not near as qualified as David to talk about that. He said it so well. I love that take that it's not a legislative issue or regulation issue, it's an ethical issue. That is so true, but it gets lost in the noise, right? And so I don't really have a lot to add to what he said. I think that, like I already mentioned, regulation, legislation, it's necessary, and I do agree with you that it would be ideal to carve out new legislation that has to do with a new we're not a commodity, we're not a security, we're crypto. So, some legislation around that would be excellent. I think I might be hoping too much, but I think that that's the ideal scenario. And so, I'm interested because I really think we'll kind of be stalled out until some of that clarity comes. And so whatever it is, we need it, to bring back trust. So.
Yeah, absolutely. And that's one thing, though. Contact your representatives. If you have an opinion on this, contact them, because when they get one letter, they know there's 5,000 other people that have the same opinion. So it does make sense to contact your representatives. I've already done so. And I know that, as David said, there's others that are trying to formulate coalitions to make sure we do speak with one voice. Gadam, you're in another jurisdiction, but your company touches many jurisdictions. What are your thoughts around regulation and legislation?
No, so I sort of echo what Drew was saying. David probably put it very well. I'll just take the point of view of somebody who's building in this space, right? So I think from that point of view, what we would kind of like to see is regulators not getting too specific with things. So I would love to see big concepts being defined as minimum standards. So for example, if you take user funds, and whoever that might be, you might call yourself a staking platform, you might call yourself a yield optimizer, you might call yourself whatever you want. But anybody who's taking user funds needs to have some sort of proof of reserve every month or every week or something like that, right? So I think if we focus, and hopefully we do focus on the concepts that need to be sort of established to establish trust, and making sure that we get those rights without worrying too much about the verbiage and whether this is this type of asset or that type of asset, or whether this is this type of protocol or whether that's that type of protocol. I think if we get regulation at that level, it will be very positive for the industry.
Mm-hmm. Yeah, couldn't agree more. True, we'll go to you on this next one. How do you think Hedera's specific attributes can add trust to crypto trading and DeFi?
So I definitely feel underqualified as I'm not the lead dev in this. So from a simple perspective, more like from a consumer or a user of the Hedera ecosystem, I look at Hedera as having massive potential because of its use cases. I think the fixed transaction costs can add a lot of trust. I think this may be a little bit different take than talking about smart nodes and the different layers. But I think that when we're talking about trusting using a platform, gas fees and the unpredictability of crypto is a huge hindrance to bringing on adoption with real world applications. And so for me, in using Hedera and seeing the real world use cases of it for businesses, I think that is one of the biggest things, plus the fact that it's green, that it takes very little energy to do the computations on the hash graph. And so that allows, especially with ESG scores being such a massive deal for most companies, that allows trust in this, in this ecosystem without having to worry about the backlash that comes from a lot of the news cycle with crypto. But then also when you talk about like miners not being able to extract value, you talk about the quantum computers not being able to really, impact or front run things just because of the unique way that the hash graph is. I think that's why we're building here. I think it's a winner. I think that long term, it's going to have the adoption because of these things. And I think it's so unique that the fees are fixed. And they're, obviously it's inexpensive, but it's inexpensive on other chains, like on Phantom or AVAX. You can have transactions that are cheaper when the network's not clogged. But when the network's clogged up with transactions, then I was the other day doing a DeFi transaction on another network, not to be named, and the gas cost was over 2,000 times what it normally is. Because so you think about a real world business trying to trust that they can build their infrastructure around the blockchain or the hash graph.
Yeah.
And you tell them all of a sudden their costs just spiked by 2000x because it was busy. That's just not viable. So being able to trust that you can build a business here with predictable costs, I think is a huge, huge benefit.
Yeah, and I mean we have the technological reasons, and then we have just good business decisions, and that's actually just a good business decision that's allowed because of some of the technological aspects. But let's talk to a dev here. Gadam, what are your thoughts about how Hedera helps the DeFi space and why it's important for the DeFi space?
Yeah, so technically not a dev, but I'll speak for our dev team.
Oh, I thought you were. I'm sorry.
No worries. So. Yeah, I think True touched on a couple of important points. But if you look at it again from a conceptual point of view, right, in order to establish that trust, we will need to have huge amount of throughput of data, and we'll need to have it in a reliable, cost-effective fashion, and a way in which it can be processed very quickly and accurately, right? Because those are the two things that will establish trust. If you can get the information accurately in a short amount of time, then everybody will feel informed, and that will basically form the basis of having trust in the system, right? And I think the hash graph is basically the way to kind of do it, right? Because we've seen it over and over again that this system can be scaled at a nominal cost or at a very, very easy scalable cost to a lot of transactions. And we saw that very recently as well, when transactions spiked but nothing really happened. Things worked smoothly, right? And so I think that basically forms the genesis or the basis of the core advantage that we feel that Hedera has in being the ecosystem that can sort of drive some of this things forward.
Yeah, I mean we've heard about the fairness with Hedera from the beginning, but it didn't really resonate with me until we saw what happens with DeFi and the lack of a mempool, and every transaction is treated independently. Those things are really important. David, what are your thoughts?
I'm not a developer, so look, I'm old school on it. I've used all the chains. I've used, and Hedera has been the easiest, and there's minimal network congestion. It's scalable, and I can see it. And both True and Gautam bring up great points. I mean, if I'm a company, why would I expose myself to more risk through like gas transaction risk? that's not taught in business school. You know what I mean? Like it's just not going to happen. And a lot of these things too. I mean, like I look at Phantom. I looked at Phantom early on. They have the Phantom Foundation, but then I look at I wonder, how much value add they're really getting from it. There is. I know people question Hedera's true decentralization with the governing council, but that is a great captive audience to have to really show that you can scale something institutionally. So from a macro perspective, I look at it, but from an actual coding perspective, I know it's good because I use it. I can't get into the nitty gritty like True and Gautam can.
Yeah, great points. I mean, we saw what SaucerSwap put out and how they compared all the different platforms. I'm the same way, right? I'm using the platform. I know it's fast. I've used other platforms. I see the benefits. But I do appreciate. I listen to the people that know about what they're talking about from the development side, and I trust what their opinions are. And it seems like they are pretty impressed as well. Guys, thank you so much for coming on and giving us your insights. And good luck with all your endeavors.
Thank you very much for having us.
Thanks for having us.
Thank you. It's been a pleasure.